Hi everyone. Today, let's quickly talk about China. Then we'll hit upcoming news for this week. And then, of course, we'll get into the charts. Let me know down in the comment section what chart you think this is before we get to it in the main video. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So I don't want to spend a ton of time here, but understand that China is still fighting COVID. I'm not sure why they're still doing this. But basically, they don't want any COVID in their country at all, and they're willing to go to some pretty drastic measures to make that happen. They put Beijing on a couple-day lockdown here once again. You can see people were confined to their apartments for at least a few days, quote-unquote. And I'm just not sure why they are trying to do this when the vast majority of people that are at risk for COVID have already been affected. I know there's some variants and stuff, and people are definitely concerned about those, but they just don't seem to have the same impact that they had a couple years ago. The big factor for us as traders is understanding that a lot of the growth going into China, which was a big driver for revenues and profits for U.S. companies, is no longer the case. There's certainly some optimism, hoping that they're going to move in the right direction here soon, but it's still concerning that they are not doing that quite yet, so be aware of that for upcoming earnings seasons. Moving over to the economic calendar, there's a few things on here that are important. We have Consumer Confidence Index, which is pretty interesting. Got median forecast at 100. As this continues to go down, that should be good for inflation, but is bad for the economy. So that's something that we do have to balance. We have the real GDP revision here on Wednesday at 8:30. All these times are Eastern Standard Time, just for the record. We also have Chicago PMI, job openings, which continues to be interesting. And then the big one here at 1:30, we got Jerome Powell speaking at the Brookings Institute. I'm sure he will say some things that affect the market that afternoon. We do have jobless claims once again here on 1 December and continuing jobless claims. Those are definitely important. And then PCE price index is another thing that I will be watching that morning, see how that affects the markets. Again, this is another one of those things where if PCE comes in light, that should be good for the economy and should hopefully slow down the rate at which the Fed continues to raise rates. And then one more here at 9:30 on Thursday. We have Fed Governor Michelle Bowman speaking. That should be interesting as well, probably not as impactful. And then we have the Fed Vice Chair Michael Barr speaking at American Enterprise Institute. And then finally here on Friday, we have non-farm payrolls and the unemployment rate. This starts to tick up. That could be bad for the economy. The current understanding, I think, that's priced in is that we're going to have a little bit of a rough landing, but not as rough as I think it's going to be if the Fed continues to keep rates this high. So non-farm payrolls and then unemployment rate on Friday. Moving over to the charts with the S&P 500 on the weekly chart. You can see we're just a couple of points off. I did talk about this in the last video. I think we're going to hit the 407, 410 zone. And then we're going to sell off from there, move back into this medium range at least, back down to around 375. I think there will be a little bit of support. I don't necessarily think we're going to make new lows here on the S&Ps unless there's a new change in the macro environment, which is certainly possible, but otherwise 375 I think will have some decent support, if not retesting these lows here and making a double bottom. Moving over to the NASDAQ on the weekly chart, I don't necessarily think we're going to get a retest of those highs. The NASDAQ has looked very weak here recently, and it wouldn't surprise me if the NASDAQ does make a low here, somewhere in the vicinity of 245, 250, but that would only be a few points off of the 235, which is the pre-COVID highs. Certainly possible. I don't know if we're going to get there on this move down. Again, I think there might need to be a change in the macro environment for that to happen. Otherwise, looking at that 255 range, the bottom of the previous low. Moving over to the Russell on the weekly chart. Again, I expect at least one more week of up move. Probably get up to about 190, maybe 193. Couple of points higher from here. And then I would expect a higher low here on the Russell. We already have a solid double bottom. Could be a triple bottom, but I think the Russell is going to find some support in this 175 zone. Maybe down to 174.20, the very tips of these previous wicks. On the rally that we've had over the past few weeks, Russell does look a little bit stronger than the rest of them. But again, we're still a little bit overbought here, and I would expect to come down to, like I said, 175. Moving over to the NASDAQ divided by the S&Ps, this ratio continues to downtrend. The NASDAQ is significantly weaker versus the S&Ps than it has been recently, and it's going to continue to get weaker here. It seems like we might be moving back into this 2.6, 2.7 before this big move up here through 2019 and 2020. Definitely a lot of downward momentum in this down move. We did have a slight 3 weeks ago here at the end of October. This trend line continues to be fairly strong. Wouldn't surprise me if we came down and retested it, creating a slightly lower low here. But either way, the Nasdaq looks weak. S&Ps look a little bit stronger than that. Moving over to the Nasdaq divided by the Russell here on the weekly chart, we do have some longer term support here. You can see it's been interacted with several times throughout the last several years. We tested it once again here in March 2021, and then we came back into that zone 3 weeks ago and did bounce off here, but it just doesn't seem like it's going to hold. It's not unprecedented that we get pretty far below this previous support. The question is where. Certainly could get back to this previous low at 5.5, or maybe come down here to 5.2. Just seems like we're going to go a little bit lower here. This looks like a weak double top pattern, and that we're going to make some new lows here on the Nasdaq versus the Russell. Moving over to the SPY divided by the Dow Jones. This is the chart from the opening sequence here. You can see that big down move we've had over the past several weeks. The Dow has been quite strong, and we're pretty much in a reasonable area we've been at the top in 2006, and once again here in 2016. It is worth highlighting here that as we move down in this ratio that usually moves into a recessionary period, so we have 2006 moving down into 2008, and then we have 2015 into the 2018 move down. And then once again, we're getting a pretty big sell-off here. And it wouldn't surprise me that if we ultimately came down to this 1075 area, which has often marked the bottoms in some of these sell-offs, I don't think we're going to go straight down at the rate that we're going. This is pretty strong, pretty fast. I would assume we'll get a couple of bounces here and then a continuation down, something like that. But this could help us look for that very bottom if we do get some lower lows on the major indices. Moving over to the SPX divided by the M2 money supply. This is a very important chart here on the weekly chart. You can see we're right at resistance. Seems like we're going to get something like a spinning top or a hammer here, an overshoot of that trend line, and then a sell-off into next week. So I would expect a few more days of up move, create that wick, and then a move down into the end of the week. That is my expectation. And then a sell-off from there, maybe coming back into this previous zone of support or slightly lower highs at this level. This has been an area we've interacted with here in May of 2020, back here in 2018, and once again here through 2015, 2016. So fairly strong level. We didn't quite touch it last time, and it wouldn't surprise me if we came back down into that zone after this sell-off that I'm expecting to start next week. Moving over to stocks above their 200-day moving average on the weekly chart. We are very extended here to the upside, big upward momentum, almost overbought here. This could be the start of an island reversal. If we do gap down to start next week, that would be a fairly good indicator, but you can see where we are in terms of historical price action. Very high here. You can see the highs November of 2020. As we were starting to fade on that rally, the market was still going higher during this period, and then we topped here November, December, but all stocks participating in that rally was starting to move down. It is interesting to see that we are this high. It certainly seems like a good indicator to me that we are a little bit overbought here and that we need to at least come down and retest this level of resistance that we've had, or maybe even slightly lower here at the 2650 range. Moving over to XOP, the oil and gas ETF on the weekly chart. It's worth highlighting here that this is a bit of a distribution pattern in my opinion. I do think we've put in a top here. We failed to get up to that previous top. You could certainly argue that we've kind of closed that gap, not quite. But my expectation here after this big move down and then slight bounce that we had last week is that this is going to continue to the downside. And then I wouldn't expect any support until we get back into this 130 zone. Moving over to GDX, I don't talk about this one a ton because it's been selling off for a while. The high was actually July of 2020 here, and we've been selling off pretty dramatically. But now, historically, we're back into a more normalized range. We touched $22.33 here, which is about the same price we've been trading here, 2016, 2017, all the way through 2018. Did dip below here slightly, and then once again here during COVID. Seems like a solid low, big interactions. Wouldn't shock me if we did do a double bottoming formation just to finish that up. But if we get up here to 33.30 next week, big rally, come back in, create a slightly higher low here, and then we could be off to a little bit of a bullish period here in gold. Gold miners are doing slightly better than gold, the commodity, but both are definitely worth watching. And this is also a fairly cheap stock if you're an options trader. It's definitely one to keep your eyes on. Moving over to TLT on the weekly chart, looks like we have some resistance at 106.25 for next week, so a couple of points higher, about 4% higher. And then after that, I would be looking for this previous level of resistance at 115. You could certainly argue that the previous lows here at 110 are worth watching, but I would be looking here for 115 at this point. Moving over to the VIX to finish up with the charts, you can see we're just a few points off of these previous levels of support. I think we might get into the 1920 area, maybe 1850 next week at the midweek. And then if Jerome Powell says some stuff on Wednesday, that could push the markets back down, and that would be the turning point right on time that I expect. So keep an eye on this. I expect a couple days of downward price action here on the VIX, upward price action on the overall markets. And once we hit this zone, 1850, 19 on the VIX, that should be the area we start to see a reversal. Of course, don't anticipate, wait till we see that move higher, and that's going to be a good time to start looking to short the markets. In terms of my positions going into Monday, you can see here, I do have one put here on IWM. I think we're going slightly higher on Monday. The NASDAQ was down, so I did sell some puts into that, and then I sold a call on Friday for 278 with about another $1.35 of potential profit there. Stocks trading just below 287, so that would be good. And then I do have a put here for Wednesday already. I will be looking to take this off before expiration. Hopefully we get a slightly move higher. I can take this off for a small profit. Let me know down in the comment section what you think I'm right or wrong about. Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.